All right, so what we're going to do now is look at some of the ASFX entries that have presented this week. We're going to start with a 1 hour entry here. We're going to then move to the 15-minute. I want to cover the bases for those of you that want to swing trade and those of you that want to day trade. The signals that we teach can be applied on both time frames, 15-minute, 1 hour, 4 hour, really anywhere. I should say not both time frames, but to both day trading or swing trading, to the biases, whether you'd want to be a swing trader or want to be a day trader. These entry signals are going to present for either one because they're based on technical patterns. So once you take the courses and you learn how to identify these patterns and the risk profile that goes along with them, the risk management strategy that goes along with them, then you're able to apply them on a swing trading time frame or on a day trading time frame. So first you'll look, this is Gbp Cad, I'm pretty sure. Yep, Gbp Cad. Back from yesterday, we had a strong shift up. This is an A1 shift candle, really bullish market sentiment. Price action is also bullish. And I love that it's coming off the 50 EMA. That's the blue line here. It's pushing off the 50, coming off the 21, putting the 8 over the 21. And then we're looking to ride the move of the 8 holding above the 21. Now, as you can see, you get about 2R on this setup, about 62 pips with the 30 pip stop before it ends up coming back down overnight last night and stopping you out in profit. So you're able to still get your 2R. And when you're trading ASFX systems, the 2R level is really where we want to focus in on, because if we can't get 2R, that's going to be where we turn away from wanting to take the trade. 2R is what our back testing tells us we should be looking for. Otherwise, we need to be decreasing the probability of that setup, saying to ourselves, hey, this is a low probability setup. Here's an example of that. So if we look, this is a D1 entry on Euro AUD yesterday. So here we're coming off the 50, coming off the 21. You can see we actually move lower through this green horizontal line. That's average daily range. It ends up pushing through average daily range. The reason why this trade is justifiable to take is because the risk reward from the entry with a 13 pip stop to the ADR level was 2R. Now, as you can see, it ends up falling 4.5R, holding that 8 EMA for a 60 pip drop. So it's a really nice trade. And the reason why I think you get so much momentum to the downside here in the afternoon, because this is 9:45 a.m., you're getting towards the end of the New York session. But the reason why I think you get so much momentum here is because you have this blue zone from yesterday's low. That zone is broken here overnight in the London session. This is the retest of the zone. We're breaking, retesting, and then moving off of that zone in trend. You have a beautiful, perfect market sentiment line for sells. It is oversold today. It's very oversold. So that would be a knock. But even there, with that knock, and if you even wanted to knock it with the blue zone, trading rate at that level, I could maybe get that. But other than that, this is a really nice trade. I would grade it a B setup or a C setup. And if you go to the 1 minute, this is where you find your entry. You've got your bearish divergence. Here's your 50 EMA retest. L50 market sentiment is in the sell zone. We want it to hold that sell zone. As you can see, it does. And that's where we see price extend to the downside. This entry signal is what we teach in the advanced course. The A1 entry is what we teach in the beginner course. So that's why they go hand in hand. And that's why we sell them together in the starter pack, to save you some money and bundle it all together. You also get lifetime access to the Discord chat. I was telling you guys on the live stream this morning, I called out how EuroCAD today would fake out into the news and reverse, and that's exactly what it did. So you get those kind of calls if you're in the group chat, if you're in the Discord chat, and you only get into the Discord chat if you take the courses. So here's another entry. This is yesterday. Austin Mendoza and some of the guys called this out. I didn't think that EuroCAD here had the potential to pop like this. I thought it would return lower. It does return lower, but it does give you a nice 40 pip run here with only a 12 pip stop. So you're looking at 3.3R. With this setup, there's a couple of knocks. First, the market sentiment line starts the day in the buy zone, but as price pulled back under the white 200 EMA, it actually pulls the market sentiment line, as you can see, down into the sell zone, down into reset. So that's the first knock. And then the second knock is you're just getting it as it's shifting up, rather than waiting for it to shift up and then coming in and trading it. But you're doing the same thing here that we did on this trade. If you go look at the 1 minute, right here, here's your divergence. Way back here at 3 a.m., it's making higher lows and higher highs off that divergence. We get our 50 EMA retest with the market sentiment line in the buy zone finally here. It just never lines up previous. Every 50 EMA retest previous had the market sentiment line in the sell zone. Plus any of these previous 50 EMA retests, you're on a 15-minute downshift. So here, you're catching it in a bullish 15-minute candle at 6:59, 7 a.m., right as it's shifting the 8 and 21 EMAs up into proper position on the 15-minute. That's why this is the entry, and then stop at the most recent higher low, which is right here. You can see that's the level that's been held. And we would just watch that market sentiment line to hold the buy zone, and what does it do? Market sentiment holds the buy zone beautifully here. And look at how that runs up, higher lows and higher highs. And that's the extension of the move right here. Here's the 15-minute of it, holding the 8 EMA beautifully. If you take a trade like this as it's coming through the 8 and the 21, not already having the 8 and the 21 in proper position, you would just want to make sure it stays above the 8. If it breaks back under the 8, I would look to get out probably and find a better entry. So back-to-back days, back-to-back entries on Euro pairs that are identical, basically. Identical D1 entries, Euro Cad, Euro AUD. Now here's James's trade. This is GJ. This is a D1 and no A1, just D1. Why? Because it was already in an upshift. See how the 8 and 21 EMA is crossed up right here? Market sentiment line is swapping, so that's a knock. It's also still in the Asian range. That is also a knock. And you have this blue zone, which is resistance from Friday and from yesterday that was held. So because you have resistance from Monday and Friday here, you want to make sure you're saying, look, we can't get great risk reward to this zone, so we want to size down because of it being in our way. So 3 knocks, C setup, but what does it do? Holds the 8 EMA, never breaks the 8 EMA from entry, and it runs all the way to average daily range, 85 pips. On the 1 minute, this is what it looked like. Divergence here, higher lows, higher highs, 50 EMA retest, market sentiment line in the buy zone. Market sentiment should hold the buy zone, and that's exactly what it does. Picks up very quickly. These should be pain-free, especially if you're waiting for that shift in the proper direction. They should be 100% pain-free. If you start to take drawdown, something might be wrong. That's why we look to get out as quickly as possible. And in the courses, I always explain to everybody not only how to manage the trade when it's working in your favor, but also how to get out of the trades when they are not working in your favor, which are 2 pieces of trading that a lot of people overlook. It's important to understand how to take an entry for sure, but anybody can take an entry. It's just clicking the button. How do you manage the trade to make sure you're getting gains and make sure you're mitigating the losses too? So very important part of trading. This was a big trade on Euro NZD here. Same time as a couple of other NZD pairs moved lower as well. So we're catching that NZD momentum. This is an A1 entry, not like the D1 that I just showed you with the divergence. This uses just the 15-minute or just the 1 hour for the entry. No 1 minute needed here. It's a 2-candle formation. The big tell with these formations is the next bar should move in the direction that you're trading. So here, RSI value is proper. That's what makes this the proper formation. Why none of these are the formation is because the RSI is not proper. Here, your stop loss is defined at 21 pips, and you hold this thing, by the end of the day, it's basically pain-free. It slows down a little bit at the yesterday's low zone, this blue zone, but it never breaks to the 21 EMA. It holds and falls 132 pips, 6R in 1 day. That's what GBP NZD can do. It's beautiful. Now, at the same time, let me see if I think I have the Euro NZD move at the same time. Is this it? This is GA, same time. So another GBP pair moving lower. Look at the similarity. 2-candle formation, perfect market sentiment, great RSI, great falling trend line. Next bar stays bearish. That says stay in the trade. It holds the 8 EMA down to ADR, 77 pips, 3.5R. How similar is that to this trade? So similar. So similar. Here, this is another entry. That's a D2 entry. We're not going to go into that too much right now. That's more for a different video, more for the courses. This is another D1 entry, CHF JPY here, coming off that 21 EMA, waiting for the upshift, then taking the entry here on the 1 minute as it retests that 50. Market sentiment in the buy zone, holds the buy zone, move extends to the upside. If you get in long here and the yellow market sentiment line dips into the sell zone, you get out of the trade. That's the sign that it's beat. But you're using the divergence to get you into that trending move. Here's the trade I was looking for. This is GBP NZD in the first push here. So you have GBP NZD pushing down here on 1018, right? You have GBP AUD right here pushing down 1018, same time frame. So you're catching that GBP momentum. And then right here, Euro NZD, same time, 1018. All of them catching that momentum to the downside. So it's really about which one do you want to pick, which one had the best risk reward. I like this one because it bodies through this orange zone. That's yesterday's low. So it sits there, breaks it, take the entry. Next 15 minutes, says stay in. You lock your stop right after that, and it falls pain-free for you. 3.5R, 88 pips, risking 25. In not that long of a time. I mean, go to sleep on that entry right before midnight. You wake up 4 or 5 in the morning, you're up in profit on that. Now, here's an important entry. This is GBP AUD. We'll wrap up with this one since we just did a lot. Here, this is very close to an A1 entry. As you can see, it ends up being a losing trade. It only goes about 1.1R. This body is not off the 21 EMA. That disqualified it from being an A1 entry. With the A1 and D1 signals, we have very precise levels that we're looking to trade off of. You could have a great candle formation. You could have the bias that you think it should move that day. But if the candle formation does not have the proper value for its open price, and if the RSI value is not proper, like there's math here. If those values are not proper, it's not about a cross or a crossover or anything like that. If those values are not proper, it doesn't fit our edge. That's not where we back tested. It could still work, but it probably won't. Some of them will, most of them won't. That's where the back testing comes in. And what this trade does for me is it reinforces how important it is to stay on edge because there's no money to be made in this. For the same example, if I close all these and we go look at Euro AUD today, this is now coming higher. This is a D1 entry. Here's the 15-minute. The risk reward was only 1.2R. This would have come all the way back up almost to your stop loss, as you can see right here. It's the same thing. Bearish divergence. You wait for the market sentiment line to get in the sell zone. You look to take the trade. But at the same time, like I said, the risk reward here is off. So the entry formation is there. But if the risk reward is off, then you still can't take the trade. So you need the bias, you need the trigger signal, you need good risk reward, and you need the other rules to then give you the grade of the setup. Like here, you would have a grade of a B or a C setup because of the divergence in your way. That's what we're looking at. At the same time, the last thing I'll say here in this little clip, here's Bitcoin. Look at this. Same exact thing. D1 into A1. Coming off the 15-minute 50 EMA, breaking out of this pennant formation. Bullish divergence on the 1 minute. You can see the white line rising on the RSI, falling on price action. It makes higher lows. It holds that bottom. Now look at the market sentiment line. The yellow line on the TDI still here holding the buy zone, saying to stay in the trade if you would have bought this morning. So now you guys have just seen me run through a couple of the entries that I've presented. If that was valuable to you, hit the thumbs up. Let me know. But I wanted you to see how these are repeatable. This isn't just like a one-off call here or there, something based on news or anything like that. These are repeatable signals that we want to avoid the news, avoid the chaos of the news, and just trade good technical signals like this. And that's why you can apply them to the 15-minute and day trade them, or apply them to the 1 hour and the 4 hour and swing trade them. It's really up to you, whatever fits into your lifestyle. We have a lot of guys that come in, they start on the day trading side, and then they move into swing trading. As time goes on and they have more money to trade, they want to do other things, so that's what they do. At the same time, we've got a lot of guys that come in and they start swing trading and then they get into day trading. So it's really about what works for you, and that's why ASFX has grown so much, is that we can help people on both sides of the aisle there. Okay? Cool. Any questions? Any questions?